So you're a developer trying to make the numbers work in a low income or a transitional neighborhood. Now, there's a little known weapon in your toolbox, and it's called the New Markets Tax Credit. Now, this strategy has quietly helped finance over 70 billion in projects from health centers to like mixed use real estate. Now, by rewarding investors with federal tax credits for funding projects and qualified census tracts is how it's worked. Now, here's the play. You as a developer, you partner with a CDE, and a CDE stands for a community development entity, and they have access to the tax credits. And then a bank or an institutional investor, they put in the equity into that CDE, usually not for a return, but for a tax relief. And then the CDE, they loan that equity back to your project at a ultra favorable terms. It's interest only, below market rate, sometimes partially forgivable. Now, you can layer this in traditional loans, your own equity, and local incentives to round out the capital stack for this. So imagine stacking up a $2 million deal like this, okay? So 4 million as a traditional loan, 3.5 million in New York new market tax credit enhanced loan, and then 2 million investor equity in exchange for the 780,000 in tax credit. And then you put in the $500,000 in developed equity. Now, instead of chasing private lenders or high cost debt, this strategy rewards your project for impact. And here's the kicker, like most developers don't even know that this structure actually exists or even how to unlock it. Now, what I'm going to show you is include a visual that is a four-party flow, that capital stack, to help you kind of follow the money step by step. But if you got a shovel-ready project in the eligible zone, I suggest you don't let this opportunity pass you by, because this is how legacy projects get built. And let's look at it step by step, where I was going over the example how the money flows. So you as a developer, and the CDE is a big part of it. And this is basically how it plays, how it's talking about how the developer with their part of it, the investor were getting their tax credit and providing a loan, and traditionally that the senior loan of the senior lender and bank. And sometimes depending on who you're working with and the deal, sometimes you get connected to some of the players through the local municipality, through the bank, through the investor. Uh, if there's a will, there's a way, is how I look at it.